Shares in Royal Mail hit 500p on Friday. That's more than 50% more than last week's offer price in what was the biggest UK privatisation in a generation. So was the valuation wrong? Well, Brian Groom, our business and employment editor, joins me now. Brian, just to start with, what is this continued rise in the share price down to?
Well, and I've been talking to Whitehall officials about that, and what they're putting it down to what they call marginal buying by hedge funds, especially as the volumes are now lower than they were on the day of the flotation. That means hedge funds, they think are buying it for short-term reasons, for momentum, because they think it's going to go further. But some of these hedge funds, interestingly, have taken a much more bullish view on Royal Mail's financial prospects and modernising its operations than the other institutions have done.
Now, Vince Cable has been criticised for really botching this valuation. Is that fair, do you think? Do you think he got it wrong?
Well, he's certainly denying it, and the government is denying it as well. And their argument is that once you look beyond the short term, if you look at the fundamentals and the margins of the company, then it will come down to something more like the offer price, which is roughly in line with the sort of multiples we're seeing in other European postal companies, in Germany, in Belgium and in Austria. But against that, this has been one hell of a markup. So I think the biggest post-privatisation, so the first day, the biggest rise we've seen in any European privatisation of any size since 2000, so it's pretty massive.
And with that all in mind, do you think that the government and its bankers and its advisors were perhaps a bit too fearful of a flop and maybe too cautious as a result with the valuation?
I mean, what we have been told by bankers is that some bankers were telling the government as far back as June that they could get more for the company than they subsequently went for. And I think the evidence is that they were pretty cautious for a number of reasons. One was certainly they were fearful of a flop. That would have been more of a disaster for them if they couldn't sell the offer. They also wanted to see the shares rise afterwards so that the company could access capital markets and so that the government's remaining stake would become more valuable. That said, they are defending it, but I think that they are a bit taken aback by just the scale of how much the price has gone up.
Were they perhaps right to have been cautious, though? I mean, if the stock had gone for a higher price initially, could it have in turn become more volatile, and would the government then have faced even greater criticism?
I think the key to this is they were very desperate to keep a small number of key institutions on board, mainly pension funds and insurance companies regarded as stable long-term investors. They were talking to this group of companies and they said right up to the flotation that above 330p, the offer price, they would have pulled out. And what the government would have faced then was probably losing some of the stable investors it wanted and having more hedge funds on Royal Mail's book. They probably could have got more money, but that was certainly their fear, that they would have ended up with a more unstable situation. Who's right in all this? I suspect we're going to have to wait several months before we really know.
Okay, Brian, we'll leave it there. Thank you very much indeed.